Yes.
Great, great. We're going to just give it one more minute. I see a couple more people joining here, so just hang on with us for another minute, and then we'll jump in. Okay. Awesome. Okay. Well, welcome everybody to the Fund 7 Investor Update. We are going to cover a number of things today. First of all, we'll kind of go over our staff and our team. And then we will cover some financial updates, some capital improvements that have taken place, and then some exciting communities that are in the pipeline that we want to share about as well for Fund 7. So that's kind of the agenda. If you have questions along the way, there's a chat function in the lower right-hand part of your screen. If you can just type your questions there. We do not cover them during the course of the call. We will get to those at the end of the call. And so again, just please use that chat function if any questions come up throughout the presentation. And so we'll jump right in. Thank you all for making the time and for being with us today. So DK, we'll go to that first slide. If you can.
Okay. Sorry, Steve.
DK, if you could back up to the management team. There we go.
Perfect.
This is our management team. No problem. So left to right, Sam Hales, you all know, our CEO, Luke, his brother, our CTO, on with us, Becky, our CFO.
Yeah, man, I gotta move.
And myself there next to Becky, I help out in our operations department. And then on the far right is Fletcher, and he's our senior project manager. Also on the call today, we have DK, or Diane, and she is our operations support specialist. She helps us in our Knoxville office there. And we also have Matt, and Matt's a project manager at our Knoxville office as well. So they're
hello.
If you all can mute as well, that would be super helpful during the. Got a lot of feedback here. Anyway, that is our management team. DK and Matt are in the Knoxville office, and we wanted to introduce you to all of them. So next slide, DK.
Awesome. Steve, thank you for kicking us off here. Good morning or afternoon, everybody. I wanted to briefly introduce our advisory board. The gentlemen you see listed here, Caesar, Vikram, Joe, and Steve, are all investors in Fund 7, and specifically Caesar, Vikram, and Steven are part of a group called Cultivate Ventures. They're very kind of on the cutting edge in terms of opportunity zones, and are helping us to really, I'd say, optimize our long-term plans with the fund and ways to really be more efficient with using the advantages that come through the opportunity zone. Joe McAdams, formerly the president of the RV division at ELS, the Sam Zell publicly traded REIT, and he's been extremely helpful in terms of pursuing new opportunities and ideas about how to kind of maximize value in our strategies. So we're super excited to have all of them on the board. We interact with them pretty much weekly, and they're an important part of what we're doing.
Absolutely. No, that's great. Okay, DK, next slide, please. We also wanted to kind of introduce you to our Fund 7 community managers. We have some incredible team members here. So starting on the left is Marissa. She oversees our community, Southern Meadows in Millington, Tennessee. We retained her when we took over the community. However, she was just doing sales at the time. And we saw a lot more potential in her, and she has done an incredible job with collections and home sales and pre-selling homes, and just been a great asset to the company. She actually received Employee of the Quarter in Q2, so I'm very impressed with her. Next to her is Melissa. Melissa oversees 3 communities in Nacogdoches, Texas. The neat thing about Melissa is when she was interviewing, I remember talking with her, and she got quite emotional and asked her what was going on. And she said she actually had raised her kids in one of the communities she's now managing back when it was in great condition. And she was so devastated to see how undermanaged it had been. And she considers it a privilege to, quote unquote, bring it back to life, in her words. So how cool is that? Just to somehow find her through an Indeed ad, and now she's going to be the one to bring those communities back for us and for those residents. So very exciting. Next to her is Caitlin. Caitlin oversees a couple communities for us in Georgia, one of which is El Bosque in Fund 7, and she is very smart, pretty much just tenacious. She'll go after any problems, and she's just done a great job for us. Made a bunch of progress there, and still a ways to go. But we're excited with her management. Next to her is Angie. Angie's the district manager for Texas and Kansas, and she oversees kind of from a distance those parks in Nacogdoches. But we have plenty of support there in Texas to bring those communities back to life, and Angie's a big part of that. She herself runs a couple parks in Rockdale, Texas, and has done a phenomenal job turning those around. Knows our business model, knows what we expect, and very reliable team member for us. And then on the far right is Jay. Jay's our newest manager. He manages a park in Missouri for us that we just closed on, and he's also going to be taking on Jayhawk in Lawrence, Kansas, which is a Fund 7 community here. So we need a lot of support. That's a challenging community, and Jay's very experienced, very detail oriented, and he's going to be just a great asset to bring Jayhawk up to speed. So that's our Fund 7 community managers as of this moment, and I can tell you honestly, it's a very strong team. These 5 here, very experienced. They've dealt with a lot of adversity in these communities, and we feel very strong about the team. So any other comments from the group to add about the management team? Awesome. Okay, so DK will jump in and turn it over to Sam.
Awesome. Thank you, Steve. Okay, so what this chart, and this information was all provided in the report that we sent out, but we want to present it here, give a chance to review it, and then any questions that people have. As Steve mentioned at the beginning, go ahead and put those questions in the chat box. I know we've seen some questions come in, and then when we get to the end of the presentation, we'll address those. So you'll notice there's kind of a wide swing in terms of what overperformance and underperformance on these communities, and what we're seeing here is pretty typical, which is the communities that we've owned for, let's say, 6 months or more, like Southern Meadows, El Bosque, we are exceeding the business plan. The ones that we haven't owned very long, the new ones in Texas, and then the very new one in Jayhawk, which is in Lawrence, Kansas, we're behind. And what happens is typically when we take over, especially if it's been an undermanaged community, there's going to be people in those communities that aren't willing to keep our rules or kind of abide by, you got to pay your rent every month, things like that. And so there's always going to be kind of those first few months of turnover. In some cases, maybe more extreme than others, like Jayhawk in Lawrence, Kansas, where there's going to be a significant amount of turnover there. But all that being said, that's a necessary part of kind of stabilizing these communities. Is before we can bring in the people that we want to bring in, there may be some people that need to move out, and that's pretty typical for us. But again, I'd look at Southern Meadows there in terms of Steve mentioned Marissa, who's managing that, and we've been very happy with the progress that we're making there. Specifically, you can see we're doing about 20,000 a month above our projections, and we haven't even been able to ship new homes yet. Many of you might know that getting homes right now is somewhat challenging, and we have a backlog of people that have actually put money down on a home. They start showing up to that community in September, so we'll be able to get about 10 homes in before the end of the year. But we're excited about just kind of the inertia that we're seeing at Southern Meadows, and we'll start seeing similar progress at the other communities. DK, could you move to the next slide? Okay, so this is showing the projected net operating income on each community, and then performance relative to projections. We're actually up quite a bit over the pro forma here. I think through the end of Q2, we're up about 29%. Part of that is initially we're going to see, so for example, let's call it Sandia and Westwood in Nacogdoches, Texas. There's going to be a number of park-owned homes that we inherited as part of that acquisition, and our goal over time is not to own the homes. We want to have a community full of homeowners, so the residents own the homes and we're just renting out the lots. And as we transition that, it's actually pretty profitable, because what we're doing is we're, maybe they were just renting before. Now we put them on some sort of like a rent to own contract, and it might be 3 years, it might be 5. If it's a brand new home, it might be 10 or more years. But in any case, during that time, we're receiving that revenue from the rental of the home that is going towards the purchase, but we're also offloading a lot of the expenses. So and that's really the main reason that we don't want to own homes over the long term, is that it's very expensive to maintain those homes, and it's relatively inexpensive to maintain the community, and just once we've done the capital improvements that we want to do, make it a easier to manage and not very much in expenses. So anyway, those are our, through the end of Q2, our financial results to this point.
Awesome.
Okay,
Thank you, Sam.
Next slide.
Yeah, we'll turn it over to Luke to. Oh yeah, we have one more on the financials.
One more. Yeah. So this was presented in the report. Notice this is only for one community, so this is not for all of Fund 7. This is specifically for Southern Meadows. We purchased in December of 2020. And this speaks to really the trajectory that we want to see in all of our communities, which is as we go in, we make the improvements, and then we expect people to not only abide by the rules, but pay rent on time. As you can see, the red bars are the delinquency, and despite growing the rent roll from January through June, our delinquencies have shrunk tremendously in Southern Meadows, and we anticipate we'll see the same results moving forward with the other communities. Okay, Steve, now we're ready to turn it over to Luke.
There we go.
Okay, excellent. So the CapEx team at Saratoga Group, we love to spend money, and we're not shy to do so. And with Fund 7, we've already hit the ground running at several of our communities. This slide kind of gives you an overview of a lot of our typical capital projects. You've got road paving, solar lighting, infrastructure upgrades like sewer and water, electrical upgrades, projects like that. If you can go to the next slide, DK. Okay, Southern Meadows in Millington, Tennessee. We've, again, about owned this community for about 7 months and really hit the ground running with capital improvements. We did an extensive tree campaign, pruning, removing dead trees, cleaning up the tree line around the perimeter of the property. We've been remodeling existing inventory of homes. We've got a great crew down there in Millington that fixes up homes. We've got a great maintenance team as well that has a lot of the skill set to fix up homes. We've even got a certified AC technician who can install and maintain our AC units and save costs that way. So I think this picture down at the bottom is one of the homes that we recently sold. And then up here in the upper right, this is our mail station / bus stop. So you can see the brand new cluster box mailboxes here. And then you can see a vacancy in that on the far right here. We're going to install some benches in there, and this will be the bus stop for the neighborhood kids. I think I mentioned this in the report as well. You can actually kind of see in the picture here the water in front of the bus stop. Southern Meadows is very flat, and all the surrounding area is very flat, and there are some significant drainage challenges. We finished up kind of our first phase of drainage engineering, and kind of the direction we're heading right now is we're going to do ditches around the perimeter of the community and add some swales and ditches and it'll probably be $50,000 to $100,000 at least to improve drainage in the community. Getting the water off the roads, preventing pooling from underneath the homes, especially the new homes that we're going to be bringing in. So we're in the midst of that right now, and that'll be ongoing for several months. But yeah, overall, Southern Meadows doing really well. Go ahead to the next slide, DK. Okay, El Bosque is a community that we've owned or managed for a little over 2 years now, but was recently sold to Fund 7, and it's a community that I probably have a lot of familiarity with compared to. I've been there many times and seen a lot of transformation already happen in this community, and it's shortly after it was sold to Fund 7, we went ahead and paved all the roads that were very much in need of repair, and looks great. I mean, the residents really have appreciated that. Our next steps for El Bosque is to bring in new homes, build a wall on the the eastern perimeter of the property for improvement of security and prevention of vandalism. We're currently in that process, and by the end of the year, we should be receiving our first homes at El Bosque. So it's a great market there. We know these homes will sell really quick. Let's go ahead to the next slide, DK. Let's see, Matt, you want to take it from here?
No, Matt, you're muted.
Well, who did that to me? Goodness. All right, we'll try this again. Yeah, as mentioned earlier, Nacogdoches, Texas, a little newer to the portfolio with Sandia and Westwood. Really wish we had a before picture of the pool on this slide because the transformation was just wild. But one of those things, inherited a pool with this community, needed a lot of love and TLC, and as you can see now, it's vibrant and being used by the residents quite often, especially in Texas. It's needed. The additional picture here showing some lot grading opportunity here for new homes to come in to the community, getting the lots prepped, ready to go. along with a lot of the other CapEx improvements that Luke mentioned. Street lights, the solar street lights will be coming to this community and Sandia as well. Smart meters going in, just helping with the recapture of water billing, improving the revenue on that end. Here, Sandia, you can see a new home being moved in, getting ready to get set up. Both great parks. As mentioned earlier, Melissa, great manager, really taking the reins and running these communities well. And the opportunity with new homes and some of the other projects, the communities are really coming along. We're looking forward to seeing the growth in each of them.
All right, and finally, we've got the newest addition to this fund, Jayhawk. It's in Lawrence, Kansas, a medium-sized property. We got quite a few improvements planned here. The only one that's been completed to date is repaving the roads. You can see on the left there, they're in very bad shape.
Awesome. Thank you, Fletcher and the CapEx team. Sam, you want to talk about some of our current deals in the pipeline?
Absolutely. Yeah. Thank you, Steve. So as everybody at Saratoga knows, I get excited about acquisitions and that certainly can be a fun part, but obviously doing what we just talked about and making these improvements and creating a sense of community, that's really where we can make a difference. So I noticed one property that didn't make it is one that we closed post end of Q2, but before now, and that is Stepping Stone in Joplin, Missouri. Is part of Fund 7, this OZ fund. We closed that about 2 weeks ago. That's 61 spaces in just south of Joplin, and we're excited about that. That's going to be a great market for us. We actually have another property in Joplin that we're closing shortly. That's not an opportunity zone, and anyway, so we onboarded that property about 2 weeks ago. We're closing Friday on 102 spaces in Center, Texas. That's almost completely occupied, as it says on the slide, 97% occupancy. Despite that, there's a lot of capital improvements that need to be made. So one of the parks is paved, but the others are not. When I say others, this is a relatively small town. The properties are really across the street from one another, but they're separate. And so there's going to be paving that's going to happen there. There's going to be some renovation of units, kind of our typical thing with street lighting. But what's nice is we have a great base of cash flow to kind of operate from. Then we have a couple of communities in Iowa. One of them, 123 spaces in Keokuk, which is right on the Mississippi River, and some strong in-place cash flow actually on both of those. The smaller one in Northwood, Iowa, we own a large community, about 200 spaces, 30 minutes from there, and so we've got a good team in place there. And so, in fact, I meant to mention this earlier, but that's when we think back on operating income. One of the things that we're seeing in Fund 7, and we've started to see in our portfolio generally, is that as we've built scale, as we add new communities, let's say in Nacogdoches, Texas, or here in Iowa, we're able to operate them at a much more efficient manner, right? Much less expense, because we already have that team in place. And we allocate based on the number of lots and that sort of thing to make sure it's fair between different funds. But there's a lot to be gained from that. And that speaks to actually the next two acquisitions that we're working on as well. 71 spaces in Troy, Alabama. So we own about 250 pads in Phoenix City, which is a little over an hour away. Fantastic team in place there that's been with us really since we started doing mobile home communities. And so we're excited about that acquisition because we've, again, have a team that is reliable and that we know can help us to succeed on that acquisition. And then we have a growing, almost exploding portfolio of communities in Greenville, North Carolina. So we own about 550 pads right now. We have another over 300 in escrow that are not in an opportunity zone. We're working on about 100 pads, 99 pads that are in an opportunity zone as well. And again, fantastic team that we have there, and we're seeing just amazing synergy and efficiency in operating those. So all that being said, we're still on target for finishing, first of all, our fundraising in Fund 7 in the next few weeks, and then fully deploying, we believe, by the end of Q1 of 2022. So I know that was one of the questions that we had previously, is just kind of the status on the fundraising. So as most of you probably remember, it's a $30 million targeted fundraise. So we have about $4 million left. So we're almost done, and we plan to close by the end of September, kind of whether we reach 30 million or not, but I think we probably will.
Awesome. Thank you, Sam. Those are exciting updates for sure. Okay, we're going to jump into a few questions here. If you have any additional questions while we're going through these, feel free to use the excuse me, the chat function there. Question here. Do you have any plans on auditing financials? The first question we had.
Yeah, good question. I'll turn that over to Becky, who's slightly off screen here, but let me.
On purpose.
There we go.
We currently don't. It's not a requirement of any of our lenders, and it's very costly. So I think unless we have a real need or requirement, we're going to pass on doing audits currently. That could change in the future, but right now we have no plans.
Got it. Thank you, Becky. Next question. Why don't your projected revenues reflect the expected poor performance for newly acquired communities? So that drop we were talking about when we take over.
Yeah, great question. So what we do is we actually have an annual budget and an annual projection. So that dip usually happens in the first 3 to 6 months. But we're really, the projection is based on what is a stabilized performance over 12 months, if that makes sense. So we're going to see a lot of variability in the first 12 months of operation. Like I said, typically it goes down, but then we tend to recover pretty quickly. So it's in there. It's not as granular in our projection as really what happens on the ground.
Thanks, Sam.
Yeah.
Next question. Are people moving out during the eviction moratorium? Are they allowing themselves to be evicted for failure to pay during the moratorium?
Steve, do you want to take that one?
Sure, yeah, I can kind of speak to that. So in general, no, people are not moving out. It's actually the opposite problem we're having. So we break it down into a couple different categories. Those that genuinely can prove they've fallen on hard times and are seeking assistance or good faith payments or things like that. And then those that are just trying to take advantage of the moment. And when we have those two groups, we find that it helps us manage them appropriately. In our newest community, Jayhawk, there, we have a lot of people that are just simply trying to take advantage. So that's why we're seeing the dip. We're going to see a number of people no longer in the community and replace them with people who want to follow the rules and regulations and pay their rent. So hope that answers that question. DK, did we have another question come in? I think we had someone raise a hand.
Yes, Steve, while we're waiting on that, I wanted to kind of follow up with your comment. You know, there's a couple of headwinds, I think, in our industry. One of them is certainly, you know, the eviction moratorium. We felt like we were, you know, completely getting back to business as usual. And of course, like Steve says, there are those two camps. And if somebody really needs help, our managers, we have somebody on our at Saratoga Group that works with the managers to identify who are the local charities, what are ways that we can get help for folks, and we work with them to receive assistance on their behalf. That's certainly something that we do. On the other hand, there's also people that are trying to take advantage because of these moratoriums and that sort of thing. And so, you know, we tend to be aggressive there and work to get those sorts of people moved out of the community, and get people in that you know, want to live in the community, want to keep the rules, want to pay rent. And that was the other headwind, somewhat related, I think, as most of us know, is inflation. And so we're seeing that in terms of our costs. It's probably mostly manifesting in terms of the costs of the new homes that we're buying. So homes that 18 months ago were maybe $32,000 are more like $42,000 or $45,000. I mean, significantly more expensive. Interestingly, at the same time, we've had a surge in demand. So even though the prices have gone up, because what happens is as that price goes up, to our end consumer, you know, we've got to recover our costs, right? So it means that they might be paying $75 or $100 more a month on a long-term contract for a new home versus what they would have paid 18 months ago, and yet we're seeing significant demand, especially I'd say since the beginning of the year, relative to what we saw a year ago or 2 years ago, and don't want to get into all the politics and policies with regards to that, but there's so much demand for affordable housing alternatives. And I think, as most people recognize, inflation, if you're in an inflationary environment, you know, one place you want to be is in real estate, because you can respond to inflationary forces. And we're certainly doing that. We still very much are focused on making it affordable for folks, but we're seeing significant demand.
Great context, Sam. Thank you for that. A couple more questions here. How are new investors treated that come in now to Fund 7?
Good question. Yeah. So it's actually pretty simple. We don't have a penalty or anything for new investors. Simply, at the moment that an investor puts, wires their money or sends their money into the fund, their preferred return starts accruing. So obviously, the earlier it's in, but we don't do any sort of penalty or discount or anything like that for investors coming in at different times. So there's dollar for dollar, same share equivalency as an earlier investor. They just missed out on some of those preferred returns. And what we've done is we'll do kind of, as we catch up on preferred return, we obviously catch up people that were first in, and then kind of push everybody forward and catch up the preferred return in that manner. Hopefully that makes sense. Yeah.
Yep. Okay, next question. It's a compliance question. What amount of improvements need to be made? This is for the QOZ component. Can new homes be used as part of that QOZ requirement?
Yeah, great question. So starting next quarter, we're going to start reporting on our basis. And so let me just kind of step back and explain a little bit how this works for those that aren't familiar. Under the QOZ legislation, part of what is required is that we need to double the basis in these, well, whatever investment you might be doing. In this case, we're doing mobile home communities. And so when we purchase the community, we have a certain amount of the purchase price that's allocated to the land, and then the rest is to the improvements. And so in very basic terms, let's say we buy a community for $2 million, and we'll say that 500,000 was land and $1.5 million was improvements. Then over the next 31 months, we're going to need to invest another $1.5 million into that community to meet the substantial improvements requirement. And as part of this, we've worked with a number of experts with regards to the OZ legislation, and have received professional opinions that including new homes is appropriate as long as those homes are maintained and not sold during the 10-year horizon, right? So when we talk about selling homes, we're using that term a little colloquially, if I'm saying that right, meaning it's not strictly a sale. It's actually depends on the state, but it's like a lease option or a contract for deed. So we don't actually sign over title until the very end of the contract when they've completed their obligation. And part of that's very intentional because we need to hold on to those assets, or at least the majority of them, during the 10-year investment period. So hopefully that answers that question.
Thanks, Sam. Okay, assuming the fund is fully invested by the end of Q1 2022, when do you project starting distributions?
So yeah, based on our previous experience, so we have another fund very similar to this, Fund 4, Opportunity Zone Fund, and we started our distributions the quarter after we were fully funded. So in this case, that would be Q2 of 2022 is our target.
Got it. Thanks, Sam. Okay, any last questions? That's all we've received so far. And any comments, closing comments from our team? Sam, Luke?
Yeah, I wanted to thank everybody that's been involved in Fund 7. We now have just over 100 investors in the fund. As we mentioned, we're almost fully funded, and we just really appreciate everybody's support and interest. It's been amazing. And the thing that I think about is the Opportunity Zone was enacted as a way to promote investment into underserved communities. And I've often told people that every mobile home community should probably be in an Opportunity Zone. I mean, these are the folks that are often getting left behind. And so it's every week we have a company call and we have a chance to talk about things as a company. And I don't think a week goes by that we don't have a heartwarming story from somebody about something that's happened in their community that's brought hope and some sort of inspiration to the people in those communities. Often they've had, these communities have been through different owners. They've had owners tell them that they're going to fix them up, and it just never happens. And so that's why we really focus on trying to hit the ground running, as Luke was saying. Like, we really want to do some immediate improvements so that the people there know it's different. We really are going to make these clean and safe and aesthetically a lot nicer than they have been. And that's really a very rewarding part of the whole experience for us.
That's well said. The impact of these communities and these residents is a huge part of this whole thing. And we enjoy that weekly call where we do a highlight from the capital improvements team or operations team. So thank you to all of you for joining today. We appreciate your time very much. We hope you learn something, and look forward to these calls going forward as well. So anything else to add before we close it out? Awesome. Thank you, everybody.
Thanks,
care.
everybody.
Thanks, Steve.
Thank you.
Take care.
Bye-bye.